Hey traders, it's John Fortune here of this week's Weekly Forex Forecast. We're going to start off with the dollar index as we always do. Now in previous videos we highlighted the 88.46 as the most likely destination for the dollar index. Well, why is this the case? Well, if we step back and we have a look at the weekly time frame, you can see we failed to make a high in the bigger picture, and it looks like we're now coming to take out the previous low, potentially an ABC or maybe even the start of a new trend to the downside once we break that low. Either way, the 88.46 in the near term does look the most likely destination. If we go back to the daily charts, you can see we actually have what looks like a wave count developing down towards the 88.46. We have this 1, 2, 3, and it looks like we're now in the fourth for one more move from somewhere in this area back down for the final fifth wave at the 88.46. That would make a lot of sense. And you can also see within the third wave here, we also have 1, 2, 3, 4, 5, and within that third wave 1, 2, 3, 4, 5. So it looks like we have the fourth wave to come, and it looks like we may be in the process of the fourth wave and have a minor correction, maybe some sideways moves in the dollar index next week before that final leg down to the 88.46, which we'll be keeping an eye on this month. You can see as well we did have the 89.65 highlighted as the key area of support to look for the target to the downside over the Christmas period. We did take this out, and if we're going to have a potential fourth wave correction next week in the dollar, it means that we don't really have a bullish or bearish bias on the dollar. We actually have a neutral bias because a fourth wave would be corrective, it would be fairly choppy. So we go into next week with a neutral bias on the dollar index. We're going to be trading the markets on their own merit without a strong bias in the dollar one way or the other, but we are going to be keeping an eye on the next leg down to the 88.46 in the coming weeks. Next we have crude oil. Now over the holiday period we highlighted the 49.31 and the 50.90 to look for, and we did trade into and take out these targets. Coming into this week therefore, we do have a bullish bias on this market. Crude oil is clearly trending to the upside, and any correction back towards, although we don't expect it to come all the way back to the 47.64, but any correction towards this level next week is going to be viewed as an opportunity to look for bullish setups. We're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 53.84. Next market we're going to look at is euro-dollar. Euro-dollar's getting quite choppy as it looks like we come back for that fourth wave in the DXY. We are still focused on bullish positions in this market as the trend is still structured to the upside. We've started to pull back, so any reversal in this market to the upside next week is going to be viewed as an opportunity to look for bullish setups. We're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.2396. The next market we're going to look at is pound dollar. Now we're still structured to the upside in pound dollar. We're quite close to the next target at 1.3711. So what we'd like to see is a deep correction next week in this market, and any deeper correction is going to be viewed as an opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3711. The next market we're going to look at is US dollar Japanese yen. Now last week we started to reverse to the upside, and it does look like we may be forming a bottom pattern known as an inverse head and shoulders. It does look like we could be coming down for the right shoulder, and if we get to pull back in this area, we're going to be looking at initiating longs to the upside in this market. This would be a dollar strength position, so you could use this as a potential synthetic hedge play against, say, a euro dollar to the upside, pound dollar to the upside, etc. If you're not sure what synthetic hedging is, we cover this in the free GMT course, and we put a link in the description below for you. So any pullback to the 102.80 is going to be viewed next week as a potential opportunity to look for bullish positions in this market. And we're going to be looking up towards the next key of resistance, the upside and the target set at the 105.02. The next market we're going to look at is Aussie dollar. Now over the holiday period we highlighted the 0.76540 and the 0.77260 to look for moves into these levels, and you can see we did take out these targets over the holiday period. Going into this week we do still favour long positions in this market, so any pullback in this market towards the 0.75280 is going to be viewed as an opportunity to look for bullish reversals. And we're going to be looking up towards the next key of resistance, the upside and the target set at the 0.7914. Next we have New Zealand dollar. Now over the holiday period we were looking for the 0.71980 and the 0.72650, and we did take out both of these targets in that time. We do still favour long positions in this market, so any deeper correction in this market towards the 0.7110 is going to be viewed as another opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 0.7321. Next we have US dollar Swiss franc. Now over the holiday period we highlighted the 0.87580 to look for a move into this level, and we took out this target to the pip during that time. The market is still structured to the downside, so we do only favour short positions in this market next week. We've already started to correct, so we are going to be looking for bearish reversals in this market. And if we start to reverse in this market, we're going to be looking down towards the next key support to the downside, the target set, the 0.8704. Next we have US dollar CAD. Now over the holiday period in previous videos we were looking for a move into the 1.26770, and this is exactly where we finished up over that period. Going into this week we do still favour short positions in this market, so any deeper correction, and as always the deeper the better as it gives us better risk to reward setups, but any deeper correction in this market is going to be viewed as another opportunity to look for bearish reversals to the downside. And we're going to be looking down towards the next key of support to the downside, the target set at the 1.2578. Next we have gold. Now over the holiday period we noted we were in an uptrend and we were looking for the targets to the upside of the 1911.20 and the 1935.40. We did take out both of these targets over that time frame and we started to reverse, having taken out the second target in this market. Coming into this week we favour short positions in this market and we may be pulling back to form a potential right shoulder. Any pullback in this area in gold next week is going to be viewed as an opportunity to look for bearish setups in this market. And we're going to be looking for bearish reversals down towards the next key of support to the downside, the target set at the 1801.02. Any short positions here would be indicative of dollar strength in this market. So this again is another candidate you could look to put into a synthetic hedging play next week if you're looking to go long euro dollar, for example, long pound dollar, etc. Next we have Euro Yen. Over the holiday period we noted the 127.060 and to look for a move into this level, and we did take out this target during that time. Long positions in this market are favoured next week, so any correction back towards the 126.450 is going to be viewed as an opportunity to look for bullish reversals in this market, and we're going to be looking up towards the next key of resistance, the upside, the target set at the 127.96. Next we have Franc Yen. Now long positions are once again the favoured play in Franc Yen next week, so any correction back down towards the 116.620 is going to be viewed as an opportunity to look for bullish reversals in this market, and we're going to be looking up towards the next key of resistance, the upside, the target set at the 117.86. Next we have Pound Yen. Now over the holiday period Pound Yen kind of moved sideways, but it is still structured to the upside, so do favour long positions in this market next week. Any correction back down towards the 139.90 is going to be viewed as an opportunity to look for bullish reversals in this market, and if we start to break out, we're going to be looking up towards the next key of resistance, the upside, the target set at the 142.28. The next market we're going to look at is Aussie Yen. Now over the holiday period we highlighted the 78.93 and the 79.43, and we did take out both of these targets one after another, and last week we started to exceed these targets. So very simply put, going into this week I would be interested in looking for long positions in this market. Notice we have some nice momentum as well, so compared to Pound Yen for example, this actually looks like a nicer chart. Any correction back down towards the 77.99 is going to be viewed next week as an opportunity to look for bullish reversals. I'm going to be looking up towards the next key of resistance, the upside, the target set at the 81.57. The next market we're going to look at is CAD Yen. Now CAD Yen is making its way to the upside and we do favour long positions in this market next week. Any correction towards the 80.460 is going to be viewed as an opportunity to look for bullish reversals. If you want a conservative target, we'd be looking to the previous high, which it has not yet reached, as the next kind of soft target in this market, but overall we would be looking up towards the next key of resistance, the upside, and the target set at the 82.64. Next we have New Zealand Yen. Now over the holiday period we highlighted the 74.62 and the 75.49, and we took out both of these targets to the pip. We took out the first target and pulled back, then we took out the second target almost to the pip as well, so it doesn't get much nicer than that in terms of price action. Going into this week, we still favour long positions in this market once again, so any correction back down towards the 74.16 is going to be viewed as an opportunity to look for bullish reversals in this market, and like Aussie Yen, we have nice momentum coming into the market. Any breakout to the upside is going to be viewed as an opportunity to look for bullish setups, and we're going to be looking up towards the next key of resistance, the upside, the target set at 75.94. The next market we're going to look at is Euro Franc. Now Euro Franc is a naturally choppy market, so it's always pretty much down on the bottom of my list unless we see some real divergence between these two currencies. As it stands though, for anybody looking to trade this next week, we've started to pull back towards the 1.07980, so any deeper pullback would be viewed as an opportunity in this market to look for bullish reversals up towards the next key of resistance, the upside, and the target set at the 1.0909. Next we have Euro New Zealand. Now Euro New Zealand is structured to the downside, but we are very, very close to the next target at the 1.68410. So there's no room here for any decent risk reward setups. What we need to see is any correction next week in this market is going to provide the opportunity to start to look for bearish reversals, and we're going to be looking down towards the key area of support to the downside, the next target at the 1.68410 initially, and if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 1.6727. Next we have EurUsd, and we are structured to the downside in EurUsd. We took out both previous targets at the 1.59790 and the 1.59070. Therefore, short positions are the preferred play going into this week in this market, but we are quite close. We're down near the low. We don't short lows and we don't buy highs unless we're buying breakouts. And in this case, we're very close to the next key area of support. So any correction in this market next week is needed in order to provide the opportunity to start to look for bearish reversals to the downside. And we're going to be looking at initiating shorts down towards the 1.57060. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 1.5588. Next we have Euro Pound. Now Euro Pound is structured to the downside. We did have a near-term reversal to the downside in this market in previous weeks. We are sitting, having pulled back to 0.90640, right at an area where we are going to start to look for bearish setups in this market. Any correction back towards this level once again next week is going to be viewed as another opportunity to look for bearish setups in this market. And we're going to be looking down towards the next key of support to the downside, the target set, the 0.8867. Next we have EuroCAD. Now this market is structured to the downside, so short positions are favoured next week in this market. Any correction back towards the 1.56590 as we're at the low here is going to be viewed as an opportunity to look for bearish reversals and bearish setups in this market. And if we start to reverse, we're going to be looking down towards the next key area of support to the downside. So first of all, the previous low over here, and then onto the next key area of support to the downside and the target set at the 1.5355. Next we have Pound Franc. Now Pound Franc is structured to the downside, which if you noticed is the same as Euro Pound. They are different markets, but they're correlated. They tend to move inversely. So this does again set up somewhat of a potential synthetic hedge play with Pound Franc and Euro Pound next week. Because it's structured to the downside, we're only looking for short positions in this market. So any correction, we've already started to correct, but any further correction to the 1.20840 is going to be viewed as an opportunity to look for bearish setups in this market, down towards the next key of support to the downside and the target set at the 1.1912. And if we can get a break through here, eventually down towards the next key of support to the downside and target 2 at the 1.1732. Next we have Pound Aussie. Now Pound Aussie is structured to the downside, and we came very close to the next key of support to the downside at the 1.7399. We need a correction before we start to look for short positions in this for anybody not already involved, because we're too close to the target. So any correction in this market back towards the 1.77880 is going to be viewed as an opportunity to look for bearish reversals in this market, down towards the next key of support to the downside and the target set at the 1.7399. And if we can get a break through here, down towards the next key of support to the downside and target 2 at the 1.7285. Next we have Pound CAD. Now over the holiday period we highlighted the 1.73590 and the 1.74510 as targets to look for to the upside, and we did trade into these targets, reversing after taking out the second target to the upside. As it stands, this near-term reversal is just simply considered as a correction and an opportunity to once again look for bullish reversals in this market. And if we start to break to the upside, we're going to be looking up towards the next key of resistance, the upside and the target set at the 1.7510. Next we have Pound New Zealand. Now notice Pound New Zealand is structured to the downside, so as we see the dollar selling off, what we're seeing is commodity currencies which are more exposed to dollar weakness, dollar strength, in this case outperforming as the dollar devalues, outperforming the other G10 currencies. So in terms of Pound New Zealand, we are looking preferably for short positions next week. Any deeper correction is simply viewed as an opportunity to look for bearish reversals in this market, and I like this because we do have a nice sell-off, we do have momentum in this market, so this will be one to watch next week. Any deeper correction is going to be viewed as an opportunity to look for bearish setups, first of all down to the previous low and on to the next key of support to the downside and the target set at the 1.8433. Next we have Aussie Franc. Now over the holiday period we took out both targets to the upside at 0.67640 and the 0.67860, and we started once again last week to exceed these targets. Going into this week therefore, we'd still favour long positions in this market. We're too close to the target for any meaningful risk to reward opportunity here, so what we need to see is a pullback, a correction in this market first and foremost. Any correction towards the 0.67240 will be viewed as another opportunity to look for bullish reversals in this market. And we're going to be looking up towards the next key resistance, the upside, the target set at 0.6901, and eventually if we can break through here, we'll be looking up towards the next key resistance, the upside and target 2 at the 0.6954. Next we have Aussie CAD. Now over the holiday period we highlighted the 0.98370 to look for a bullish rally into this area, and we did take out this target, and this is pretty much where we sit now going into next week. Going into next week, we want to be looking for long positions once again in this market. Too close to the target really here for any meaningful trade. So we need to see a correction. This is starting to bend, as it were, and any correction would be welcome in this market. So any pullback towards the 0.95130 will simply be viewed once again as an opportunity to look for bullish reversals in this market up towards the 0.9930, and if we can get a break through here, we'll be looking up towards the second target to the upside at the 1.0048. Next we have Aussie New Zealand. Previous videos we highlighted the fact we're trending to the upside, and we were looking for the 1.0701, which we did take out over the holiday period. The uptrend in this market is still intact and still favour long positions in this market going into next week. Any correction towards the 1.0661 is going to be viewed as an opportunity to look for bullish setups in this market up towards the next key resistance, the upside and the target set at the 1.0759. Next we have New Zealand CAD. Now in this market we highlighted the fact it was trending to the upside, and we highlighted the 0.91960 and the 0.92440 as two targets to look for in this market. We traded into the first target just over Christmas, and last week we traded into the second target and started to sell off. The uptrend in this market is still intact and still favour long positions in this market. We've started to correct and pull back to the 0.9160. So we're coming into an area now to start to look for potential bullish reversals in this market. And if we start to break to the upside and we start to see those reversal patterns, we're going to be looking up towards the next key resistance, the upside and the target set, the 0.9280. Next we have New Zealand franc. Now over the holiday period we highlighted the 0.63760 to look for a move into this level, and we did trade into this level almost to the pip before selling off and rallying once again last week. Going into this week, long positions are still the favoured play. We would like to see a correction first towards the 0.63410, and this would be viewed as the opportunity to look for bullish reversals in this market up towards the next key resistance, the upside and the target set at the 0.6462. And last but not least we have CAD franc. Now CAD franc is structured to the upside, so very simply put, any correction towards the 0.69020 is going to be viewed next week as an opportunity to look for bullish reversals in this market, and we're going to be looking up towards the next key resistance, the upside and the target set, the 0.7008. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thanks to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I hope you all had a nice break over the holiday period, are ready for the new trading year. I want to wish you a nice weekend, and I wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.